Thanks so much for joining us. So I'm just going to introduce the panel very briefly, myself as well. So I'm Madeleine Boys, and I head up programs and innovation at Global Digital Finance. It's my pleasure to be here with this wonderful panel on what I think is a very topical subject for the Digital Commonwealth Summit series. So we're here to talk about whether there is a use case for a Commonwealth stablecoin with the right legislative framework. I think it's a topic with a very opinionated panel as far as I've been able to tell so far. So very looking forward to the discussion. But before we get into it, can I ask my panelists to introduce themselves? Loretta, if you want to get started.
I think you all know me, but for those of you who don't, I've spent the last 10 years of my life diving into this space. I've worked in policy for a long time. Obviously, we had Bitcoin and Ethereum. That was the first laws I wrote. That's pretty whoopie-ding now. What I'm starting to focus on now, what countries are asking me to look at is stable coins, the tokenisation of central bank assets, and how private money and public money are going to integrate. I've got some interesting comments on that, but I'll give those later.
Thanks. I'm Ollie Carew. I'm one of the digital asset leaders at EY here in the UK. So I'm leading a lot of our work around the tokenization of commercial bank money, also advising on CBDCs and on stablecoin projects as well. Prior to EY, I worked at the Bank of England, so just over the road, where I helped set up the fintech sort of policy unit and worked under Governor Caine for 5 years. Before that, I worked at OMFIF and set up the Digital Money Institute. Yes, and Lord Desai. It's a shame he's not here today. I was looking forward to catching up with him. So I've been involved in sort of, I'd say, interbank innovation and payments around blockchain for the last 10 years. Thanks.
Hey everyone, thanks for having me here. My name is Zhou. I'm currently the CEO for Coins.Ph. Coins, we're the largest, funny that Mr. Nguyen was just talking about the Philippines, but we're the largest regulated exchange and wallet in the Philippines. And then we're also currently on a path for global expansion. We have one of the first VASP licenses in Mauritius. And then we're also looking to expand, I think, into Europe, Latin America, and Africa. You're asking me how did I end up in the Philippines? I bought the company in the first half of 2022. And then in my previous iteration, I was a CFO at Binance.
I'm Caine. I'm the Global Head of Strategic Partnerships for Tether. We're the largest stablecoin in the world with about $120 billion market cap now. We focus on emerging markets and developing nations. We're working on tokenizing a lot of real-world assets, from bonds, equities, to gold-backed stables as we have now, as well as Euro and USD. Stablecoin. Before that, I spent around 7 years at Kraken, the digital asset cryptocurrency exchange. And that's about it.
Yeah, super. Well, before we get into it, I think maybe if we can just cover a little bit as to where we are in terms of stablecoin innovation. What does the landscape currently look like before we get into the weeds of what a Commonwealth stablecoin might look like? But Caine, you're really well placed to talk about the innovation landscape a little bit at the moment. Do you want to get us started?
Yeah, well, at Tether, we're really focusing on tokenizing a lot of different real-world assets at the moment. We've actually built a platform called Hadron, which allows anyone to basically create any type of tokenized asset, from their own stable coins to tokenized bonds, which there'll probably be an announcement about next week about one country. We're working with some sovereign nations as well to create gold-backed stable coins. We're really kind of just looking to expand in all different ways to tokenize anything, and maybe more turning into like a tech software as a service company rather than just being just a stable coin, which Tether's been in the past. Alongside of that, we also invest in AI, sustainable energy, sustainable farming, education, and many other things. So Tether's not really just one thing, but the technology side of it that we're really excited about is our new Hadron platform, which literally allows anyone to tokenize anything. We don't take any of the regulatory burden on our side. It's down to the third parties to handle all of that side, but we just use Tether's experience, cryptography, and trust that we've built, in the industry over the years to kind of allow other people to build.
Yeah, super. I mean, I think that really speaks to sort of the different verticals that we're seeing across sort of the utility and the transactional utility of stablecoins coming to market. So, Wei, maybe if there's anything that you want to add on that front. Otherwise, I'm going to open the elephant in the room, which is the Commonwealth stablecoin subject.
Yeah, I'll jump in here just real quick because we issued a peso, which is the currency in the Philippines, a peso-backed stablecoin 2 months ago. And then sort of the framework for stablecoins, I think, in Asian countries is actually, I would say, developing a lot faster. You basically see Singapore with the SGD. There's a couple of private issuers in the market. And then Hong Kong is coming out with basically regulatory sandbox. And then for us, we're in the regulatory sandbox as well. So I think, and I think Japan is in talks of sort of coming out with different regimes. So I just think that, things move at different paces, obviously, in different parts of the world. But I think where things can maybe move a little bit faster are probably just more so in the developing world, where we actually see the adoption of USDT issued by Tether, much faster, I would say, in the developed worlds. And I think that's the dichotomy that I think we can think of when we reference into sort of the greater Commonwealth.
Yeah, absolutely. And I think, with that perspective from sort of the different regulatory frameworks that are emerging around the world, can you maybe speak to how a Commonwealth stablecoin might solve for some of those challenges that you're seeing, or not, for that matter?
Yeah, I think the way to frame it is if you look at the Commonwealth as a whole, I think close to 2 billion people in population sort of in the region, but a lot of them I think are not sort of in the developed economies, right? And the way you think about it, especially look at how the popularity and the tremendous growth behind Tether's USDT stablecoin, I think it comes down to financial inclusion, right? I think if we want to get bank accounts in the hands of citizens and peoples around the world, and we're not opening banks fast enough, or we're not opening payment apps fast enough, then basically giving everyone a wallet on their phone that can have access to that is sort of step one, right? Obviously, there's different regulation about what that currency is and then what that token is, but I think that's something that have taken place irregardless of regulation anywhere, right? So you basically have had adoption that's growing at paces that you don't really see, I think, in the developed economies.
I think there's certainly a huge piece around financial inclusion, and I think that's one of the probably use cases that you'd want to delve into when you're thinking about a Commonwealth stablecoin, certainly. But Loretta, I know you have some views around this, especially the work that you've done in some of these developing markets. So over to you.
Yes, I work across a lot of the emerging world. Nigeria is one of the biggest countries that I work in, India, in the Caribbean, Mauritius. I see stablecoins a bit differently because I think they, to me, and I was a banker for many years, they're in their form at the moment when they're not yield bearing. They just look like deposit notes, to be quite frank. We had deposit notes in the 1940s in the US. Now, how do we make those things look sensible, and how do we regulate them? We take a piece of the banking law and we make sure they're fully collateralised, that they say they're collateralised the way that they are. And there are certain steps you can take out of any banking law, and in common law, because most of the law is the same, it's not a very difficult thing to do. I'm doing that in Mauritius at the moment, and I think that's a good starting point, because I think the CBDC conversation is starting to die now, and I think Mark Zuckerberg came out in 2018, who scared the living daylights out of every central bank because he was going to issue his own cryptocurrency and challenge sovereign states. It was an issue. But now I'm seeing that central banks are becoming much more comfortable with public and private money, as long as they can have some regulation and controls around what that private money looks like. So, I always say to central banks now, I get paid in stable coins. It goes into my wallet. I can move it onto my exchange. It's very transparent. The taxman sees it, whoever needs to see it, and I can move it into my own bank account in less than a minute. So in the emerging world, you think about it, it takes 6-7 days to move money. If you're in a grey-listed country by the FATF, that can take you months, weeks. It costs you a lot of money. So there's many, many, many benefits to stablecoins, and I think, Wei and I've talked about it too. If you look at the emerging world, what is the biggest problem? And I think the biggest problem we still see is the US dollar. And you can tell me that that's going to be de-dollarised, whatever you say, but every country that I work in Africa and the emerging world, they need US dollars, and they have a deficit of US dollars. So US dollar stablecoins will and are being particularly poignant in economies that have deficits in US dollars, because people will still take dollars. I'll use Mauritius as an example. You know, sugarcane's the biggest production still, other than tourism. It's very, very hard for the central bank to hold reserves in US dollars or other people they're using. So at the moment, I see the US dollar as being the most prominent stablecoin, or to the backing of the best stablecoin, because it goes across the globe.
That's, I think, I mean, it's just, whether we like it or not, it is just sort of widely accepted. And when you turn to those developing economies, I mean, it's very hard to rework from that, because then not only is it sort of commonly accepted, there's a whole piece around sort of trusting new systems. And why would we actually sort of like turn to not only sort of other means of payment, but also pegged against a different currency if it's not the dollar? So I think that starts moving us into what are the practical challenges around it.
I'll jump in just a little bit. I think it's less about, people want the dollar. It's just that everything that we purchase is quoted in dollars.
Yeah.
It's just it's like a measuring stick. Right? If the measuring stick is in dollars, oil, corn, flour, everything's quoted in dollars. Right? So I think that's the thing. Like, there's no way out of it either in the immediate future. So that's the trouble.
Yeah, I mean, I completely agree, and with Loretta's examples as well, with Mauritius, but again, like many other developing economies, like that's, I mean, it's the measuring point. But Ollie, on the practical challenges, you want to get us started with some of the...
Yeah,
we had a long chat about this, but please.
I was quite happy when we got this, because it was, a global sort of Commonwealth stablecoin, right? How would you do it? And my mind probably just immediately went, well, I can think of a few problems and challenges. And I tried even harder to think about how do I just solve them, not just to come up with challenges and problems here. I'm keen to hear what everyone else says. But I mean, the first one is, are you going to have this as collateralized? Right? Is this going to be a collateralized stablecoin? So are we talking about a currency? And in which case, which one are we going to peg it to? I think, as we've just discussed, there's lots of reasons and sort of rationale as to why it might be pegged in something like US dollar. If it wasn't, I think you get into a much more complex conversation around what you would actually peg it to, right? If it was a currency from the Commonwealth, noting that there are 56 countries within that, and there's some politics to it as well. But then there's a question of, okay, well, maybe if it wasn't dollar or anything else, could it be commodities, baskets of them, everything else? But as Wei just said, what's those priced in? Dollars. Maybe it'd be algorithmic, but I still feel like that would be a lot of challenge. Yes, exactly. So it's fair to say, okay, it's dollar-backed and pegged. Then I started going through, okay, well, if it's dollar-backed and pegged, who's setting this thing up? And where is the collateral sitting? Which commercial banks, let's face it, are going to hold that as well? And is it going to be treasuries as well? So that I started thinking around as well, and saying, well, a lot of the challenge we have sometimes in these jurisdictions is access to certain banks as well. So there's a bigger question around, if you wanted to start to do this, how you would access that. I think just one sort of final thought. I'm keen to hear from others around, some of the practical challenges or how you could overcome them. But I guess the other thing I was thinking around is, what if it's not sort of one stable coin, but it could be multiple in different jurisdictions, right? Which, if they're tied to dollars and others, it can work in the currency and work in the local area. So you've got an entity that can distribute it there. There's at least some level of maybe saying, what if it's multiple countries within the Commonwealth that use either a similar one or there are multiple ones there, but there's something about maybe, I think, not having one stable coin to rule them all across the Commonwealth. But yeah.
I think I just got flashed for 5 minutes left, but I think this is a really interesting topic. So any other views from Wei or Caine on the challenges piece?
Yeah, I would say, like, at Tether we look at and advise some like small boutique nations and small sovereign nations to be independent and resilient. Don't go with a US dollar-backed stable coin. Like, we advise to go with gold-backed stable coins, commodity, as well. So you're not tied, to being dependent on another nation's economy, So for us, it doesn't have to be all about the US dollar. Of course, for us, it works out pretty well with current interest rates, but we don't advise it to everyone else. And even at Tether, we've branched out. We have our own gold stables. We have a portion of our reserves in gold and Bitcoin ourselves, as well as a majority in US Treasury bills. But I think there's other real-world assets you can back it with, back stables, where it doesn't need to be fiat-backed.
Yeah, for sure. And I think, I mean, maybe when we're looking at those sort of like alternative solutions, it comes back to what we're trying to really solve for. So, you know, Loretta, you touched on coexistence of private and public money. There's the financial inclusion piece, remittances, of course. Like, these are all things that we're trying to look to solve a little bit. But maybe if we just close off on that thought, well, it's okay. Aside from a Commonwealth stablecoin, which does have the practical challenges that we just, I think, like touched the tip of the iceberg with today, but you know, how could we maybe look to sort of address some of those challenges in terms of like improved regulatory harmonization across different jurisdictions and so on? Loretta, if you want to get us started with some thoughts there.
Yeah, so I mean, I always choose a Commonwealth country and a small one to start with to test case this stuff. I mean, and Mauritius is one of them, because I think regulatory clarity and trust in this ecosystem hasn't been around. We need trust, and for people to use this stuff, you need trust. You need to be trust that it's collateralised. You need to trust that these things one-to-one backed, and if the peg breaks, that you're not going to lose your money. So there are rules and regulations that I think jurisdictions will put into place. Interesting that you called some countries a boutique country. I'd like to know what they are. But I think we've also got to be careful when we're looking at commodity-backed stablecoins, because is the technology really there? You know, this comes down to, I think, when you looked at CBDCs and why they haven't had an uptake, other than we don't want central banks to know what we do with our money. Privacy, compliance and security are the three biggest problems that we see in public money. I think private stablecoins can solve this, but they have to work hand in hand with public money, and central banks have to have a comfort that these things aren't going to create instability in their country. So that's financial stability, collateralisation, trust that there are assets backing these things and what that looks like, and full transparency into what the stablecoin looks like.
Could I just add to that? Well, I'd like to just say about the European regulations and the market for stablecoins. I think are just disastrous. It causes if we're going to talk about like trust, we're talking about regulations that can cause systematic bank crashes, bank runs, where banks are like the fractional reserve banks that hold 10% of the assets there while lending out other 90%. What happens when people go to withdraw the money, or Tether's got $60 billion in fractional reserve banks and we can't get our money out? This causes banks to collapse. It causes 400 million people we serve around the globe to be affected by this as well. So there's got to be some logic in the way things are regulated, you know, as well. To me, it's just outrageous that the banks, the regulations in Europe expect us to put that amount of money in banks that aren't going to be holding the money there for us.
Just also one other thing, I mean, we talk about regulatory harmonization across different jurisdictions. I mean, with stablecoins in the UK, we don't even have that, right? We've got two different emerging regulatory regimes between the FCA and the bank for when something suddenly becomes systemic, right? Which again is a bit of a dark art more than it is science. So, you know, I think it's a tough one when you go, yeah, we need a global harmonization. I mean, we've been trying for that in banking supervision for years. You know, we struggle even with some of the basics. I know Basel 3.1 has just come out and we've made some progress, but now you're asking for a kind of an emerging technology area and to say, right, we want to now you just tackle this. I mean, there's been some good progress on things like FATF and there's FSB recommendations, but I think it's so far off in a way. I think it's great, the work that you do, Loretta, in some countries about actually, can you take logical steps of using what's there, but I hear the points as well around, you know, it's there's also some questions around if you're to go and rely on, let's say, another part of financial services to back this industry, you've got to make sure that that's kind of as solid as it has to be, right? Because you don't want to be at the mercy.
History showing it's not that solid, right?
Yeah.
As well.
I kind of like I think Caine mentioned a really good point. It's like if you're a stablecoin company and your money sits at a bank, and that bank's not fully reserved on that money. I mean, that happened with Silicon Valley Bank with Circle, right? I mean, Circle went down to like 90 cents on the dollar because their cash at Silicon Valley Bank wasn't safe, right? So I actually think there's an evolution of this. Basically, originally it was stablecoins, basically cash in the bank, right? But I think what we've arrived at right now, especially with some of the stuff that they've been doing there, is instead of cash at a bank, you're basically, I'm holding treasury. I'm holding T-bills. right, which have the liquidity profile of cash, but then it's fully reserved, right, because it doesn't sit at a bank. And I think that's something that you're seeing out of Hong Kong right now. That's something China has been working on, and that could be a model, I think, for us as a region here, is that instead of using cash at a bank as a backed stablecoin, you basically use the T-bills, right, or use the treasury notes.
Or
so.
One other idea, just very quickly, I know we're about to end.
We have to end pretty soon.
I'm not going to talk about my mum, so we might get kicked off. Is an idea of, so the Bank of England are saying, right, if you're systemic, you have to hold your reserves at the central bank. Okay, well, that's kind of better than a commercial bank in the sense that, it's the most trusted entities we have. But what they're saying is I'm not going to remunerate it. But there's an interesting model which we have in the UK which could apply, which is Scottish banknotes. They're partially remunerated, and yet they're held at the Bank of England. We've got a framework for that. Why don't we use that for stablecoins as well?
There are a lot of suggestions here, and I think we can carry talking over them over lunch, because right now we have to wrap up. Thanks.
I was just going to say, though, if you work in the emerging world, trying to get a group of policymakers in the same country that are men to agree on the same thing is very arduous. So to get the entire Commonwealth, good luck.
Thanks, Loretta. Thanks, everybody.